Hello and welcome to Asking for a Trend. I'm Josh Lipton, and for the next half hour, we are breaking down the trends of today that'll move stocks tomorrow. There is a lot to keep track of, so we're focusing on what you need to know to get ahead of the curve. Here are some of the trends we're going to be diving into. Stocks rallying Thursday. Wall Street saw green thanks to a boost in tech, with Oracle leading that rally. At the end of the session, all major indices did close higher. And crypto may be king. Coinbase is holding its highly anticipated summit. I'm going to be bringing you Coinbase's CEO live to talk about the future of digital assets. And it's a risky world out there, so we're taking a look at the future of insurance. We're speaking with the CEO of Hippo Insurance. Well, U.S. stocks moving higher as a rally in Oracle lifts the big tech sector, while investors digest easing inflation pressures. Here with more on the trading day takeaways, we got Yahoo Finance's Josh Schaefer. Josh.
Hey Josh, yeah, we had the S&P 500 closing at its highest level since February 20th today. That was just one day after we had our last record high on February 19th, so we're getting close. But I want to highlight some economic data from this morning because this was pretty interesting. We've been watching this weekly claims data for a while now, right? This is kind of the number one thing, weekly unemployment claims, that when we ask economists on air, Josh, what are you worried about? What are you watching? How do we know if that slowdown's coming? They always talk about claims, right? And this is part of the claims data set, but a little bit different. So this isn't initial jobless claims. This is continuing jobless claims. So people that continuously are not finding a new job, right? You saw that move up to its highest level since November 2021, over 1.9 million claims. Essentially, what this is telling us is a story we've been talking about a lot, of course. It's taking longer for people to find jobs right now. Hiring is slowing overall, broadly, in the labor market. And so right now, if you are out of a job, people are taking a little bit longer to find one.
If you look at this labor market data, Josh, against long-term averages, would you look at that data and say, okay, this data is screaming for Jay Powell and our central bankers to cut?
It's certainly not screaming, right? And then you've seen claims higher than this before and higher than this when the economy was maybe okay. What the issue is sort of the rate of change story, right? We're starting to move higher. And so Renaissance Macro's head of economics, Neil Dutta, was pointing out, as you start to move higher, what normally comes with that? A higher unemployment rate, right? And so if claims keep moving up, then you're worried about that unemployment rate going up. You're worried about the overall health of the labor market. So it's just something that right now it's kind of, I'll go yellow sign, right? It's a little bit of a yellow flag. We're not at red flag status here, red light panic, but it's certainly something that we're going to keep following.
All right, Schaefer, number two.
Yeah, so this is something I'm writing about for our morning brief newsletter tomorrow, Josh. Just the overall broadening that we've seen in the market this year. We're almost 6 months into 2025. Take a look at this chart from Richard Bernstein at Richard Bernstein Advisors. So what we're looking at is the percent of stocks in the S&P 500 that are outperforming the index. You can see the last 2 years when we kept on talking about Mag 7, not a lot of stocks were beating the market. Only 30% of stocks were. Well, this year, big move up. You're at about 45% as of earlier this morning when I was checking the data. But what this is sort of telling us is broadly in the market, there's just more going on. There's more things working. Let me show you the sector action for the year, Josh. You had 7 of the 11 S&P 500 sectors outperforming your 2.8%. So this market is certainly becoming a lot more than just tech and big tech.
And when you talk to Mr. Bernstein, well-known, well-respected, obviously, what did he tell you he was buying?
Yeah, so it's interesting. So he had a research note out, which is initially why I reached out to him, called the Mid 7. Not a big Mag 7 fan right now, Josh. So he's not looking at things like tech. He's looking more at a sector like utilities, one of the best performers in the S&P 500. Interesting because you and I have talked to strategists that will tell you utilities because it's an AI play, right? AI that's involved in the power. Bernstein likes utilities because it has a little bit of defensive stance to it, and they have high dividends, right? Those companies that are able to just continuously produce cash and give back to investors is something he's sort of interested in right now, not necessarily traditional growth companies like those companies in the tech.
Yeah, we've had smart folks who like that sector because, to your point, Josh, they actually see it as sort of a way to play offense and defense.
Yeah, it's a football player that can do it all, right?
Utilities. There you go. Thank you, Josh. Hippo Insurance hosting its 2025 Investor Day today in New York City. And Yahoo Finance's Julie Hyman is sitting down now with Hippo CEO and President Rick McCathron.
Indeed, I'm out here with Rick McCathron, and you guys were just talking about stocks that are outperforming the broader market this year. Hippo happens to be one of them. It's up about 10%. It actually rose about 9% today in the wake of the Investor Day you guys were having. So thanks for being here, Rick.
No, thank you so much, Julie, for having me.
So you guys came out with some new targets today. They're targets that are pretty far out for 2028. I guess I would ask, and of course a lot of companies do out-year planning, but why did you want investors to sort of have that further out roadmap that you gave them today?
Yeah, a couple reasons for that. First of all, the last Investor Day we had was 3 years ago, and we put 3-year targets in place at that time. And one of the things we wanted to do today was to show everybody how we compared with the targets that we gave 3 years ago. And we were pleased to report that we beat all of the financial targets that we put forth. Insurance is the type of industry that sometimes takes a longer view to understand the changes, the trends, and what you're doing. So we wanted to put the same type of 3-year targets out and put those stakes in the ground. And we're the type of company, when we put stakes in the ground, we do everything we can to hit them.
We haven't had a chance to catch up with Hippo in a while. So for folks who are watching, I should mention, first of all, you guys are not yet profitable. You hope to be going out to 2028, is my understanding, on a net income basis.
Correct.
And you are effectively an insurance startup. What makes Hippo different from the big insurance companies of the world? What is in that startup DNA?
Yeah, and I think there's 2 different components in that startup DNA. And so what we have guided for 2025 is net income profitability this year. So we in our fourth quarter. So we're driving towards that. What makes Hippo unique is 2 different aspects of our business, and we shared this strategy during our Investor Day. The first aspect is our homeowners insurance program. Hippo has a modern approach to homeowners insurance, focusing on customers that are buying new homes and customers that want a partner to protect their home. And this is something that we focused on through the use of lots of technology, easy interfaces, both for the home builder, the home buyer, and the customer. That's one aspect of our business. The second aspect of our business is insurance works well when you have diversified exposure. You spread that risk across different geographies and different product lines. And one of the portions of our business that we're most excited about is our fronting carrier. And a fronting carrier is an insurance company that partners with other smaller insurance organizations to bring all different types of products to market. And that creates a diversified portfolio to go alongside our homeowners insurance offering.
Gotcha. And you announced a new partnership, right, today on the fronting front.
That's right.
So what's the significance of that partnership?
It's a really good partnership. It is with Baldwin Group, which is also a public company. What the partnership essentially allows both companies to do is for each of us to do what we do well. So there is a component of our business, as I mentioned, which is new homes. Baldwin has a subsidiary called Westwood that is the preeminent provider of new home insurance to consumers buying from the largest home builders in the country. We had a smaller version of that at Hippo, and what we decided to do collectively is to partner and say, you guys are great at working with builders, you should do that. We are great at building new insurance products for the modern consumer, and we will do that portion of it. So now, between the two of us, we have access to 20 of the top 25 home builders and dozens of other home builders beyond that. And Baldwin is focusing on distribution. We are focusing on the underwriting. It has tripled our funnel for new home business.
Gotcha. I want to take a step back for a minute because you guys went public through a de-SPAC in the go-go days of the SPAC and IPO boom, right? And so like so many companies, you saw the stock sort of spike, and since then it's had, it's come back to earth, so to speak. So what message do you want to sort of give to longer term investors about what they can expect sort of growth-wise from a company like Hippo?
Yeah, I appreciate the question. And the main message that we wanted to share is insurance generally is longer term. So the guidance that we gave today for 3 years is to double our written premium to over $2 billion, to 4x our adjusted net income to $125 million, and to create a return on equity of 18% or better. This type of financial performance shows the discipline of the earlier stage company really hitting its stride on those positive financial aspects to benefit our investors.
Okay, Rick, thanks so much for being here. Appreciate it.
Thank you so much. Appreciate it.
Stick around. We got much more Asking for a Trend still to come.
Micron planning to invest approximately $200 billion in research and development and manufacturing in the U.S. This coming amid the nation's broad efforts to onshore semiconductor manufacturing. Here with more on the state of the chip sector, let's get to Christopher Miller, Tufts University professor and author of the book Chip War. Chris, it is good to see you as always. Your timing today, Chris, impeccable, because we have a story right in your wheelhouse with Micron planning to invest more than $200 billion in semiconductor manufacturing here in the U.S. I was reading, Chris, creating roughly 90,000 jobs, direct and indirect. Of course, this is music to the president's ears, right, Chris? This is what Trump says he wants. He wants more domestic chip manufacturing. I'm curious, Chris, what do you make of that Micron headline, that Micron news? What was your response?
Well, I think Micron's been signaling for some time that it's planning to build new facilities in the United States. This actually dates back now a number of years since the passage of the CHIPS Act in the first Trump administration all the way through the Biden years. Micron's been developing plants in a couple of different locations across the U.S. And so I think this new announcement is just a continuation of this trend of chip makers, both from the U.S. and other companies, planning to build more capacity in the United States.
I'm curious, Chris, we have seen these companies making these big splashy announcements, right? How dependent, though, Chris, do we remain right now on sourcing chips from Taiwan, from Korea? And how do you see that evolving, Chris, over the next 5-10 years?
I think for all of these companies making announcements about their plans to invest in the U.S., the big question is, what's the demand going to be? Will there be customers that are looking to buy these chips? And so for all of these countries, not just Micron, but the entire industry, they're going to really carefully calibrate their capital investment based on what demand looks like. And so it's one thing to issue a plan right now, but that could change up or down based on where demand is. Right now, the U.S. is still tremendously reliant on chips imported from other countries, and Taiwan and South Korea being really critical players. That's true for data centers, true for smartphones, true for pretty much any application. And that's because the chip industry is highly globally integrated, with Asian countries as well as Europe playing an important role in the chip industry alongside the U.S.
Chris, I want to switch gears. I want to talk about export controls as well, because we had Trump come out and say, listen, we have this new effort in place, this new framework with China, get those negotiations back on track. It sounded, Crystal, like the curbs placed and related to advanced chips, those remain in place. Our Commerce Chief, Howard Lutnick, telling media, it's very clear we are competing with China in the AI race. Howard Lutnick said, we are just not going to give them our best chips, and of course, they want them. What do you make of that, Chris?
Well, I think the Commerce Secretary has been pretty clear that he wants to enforce relatively tough export controls on the sale of AI chips to China. The trade negotiations haven't changed that. And he's been public over the past couple of weeks in also pointing out the real challenges China faces in trying to build up its own domestic chip making capabilities. It's still pretty far behind the U.S. when it comes to capacity of the ability to produce AI chips. And so long as China can't produce enough AI chips at home, it's going to be reliant on whatever chips the U.S. is willing to sell them.
And so are these export controls, Chris, are they effective, ultimately, in your opinion, here at slowing down China's chip sector and slowing down their own domestic chip ambitions?
Well, the controls on the sale of chip-making equipment to China have definitely been effective. That's the reason that companies like Huawei can't produce enough chips for themselves domestically. The controls on the sale of AI accelerators to China have also been a real challenge for China's AI firms. If you listen, for example, to the leadership of DeepSeek, what they've said repeatedly in public is their number one challenge is accessing the quantity of AI chips that they need to train and then to deploy AI systems. And so if your goal is to create problems, cause dilemmas, create delays for Chinese tech companies, the export controls are certainly doing that. And that's what Chinese tech leaders are saying.
Chris, always great to see you and to have you on the show. Thank you.
Thanks for having me.
Coinbase is holding its third annual State of Crypto Summit. Visionaries, policymakers, and financial leaders gathering to talk the agenda for the industry. Let's send it over now to Yahoo Finance's Brian Sozzi, who is joined by Coinbase's Chief Executive Officer. Brian.
All right, thanks so much, Josh. Appreciate it. Here with Brian Armstrong at the Coinbase Summit. Brian, good to see you here. You dropped some new products, but there was something you said on stage that caught my attention. It said that Bitcoin could become the world's reserve currency because of the US debt situation, which is ballooning. How realistic is that?
Well, it really is unclear at this point, but one thing that is clear is that democracies around the world are having trouble getting deficit spending under control. And that can only, if you study history, right, the changing world order, different empires, like who had the reserve currency at different moments in time, once you decouple currency from hard commodities, the inevitable story is they get overprinted and extend, right? And so I think right now, to be clear, I want the US to remain the reserve currency status. I think a strong America is very important for the world, and I think cryptocurrency is helping the dollar enormously with things like USDC and stablecoins. But if the debt situation doesn't get fixed, I do think that eventually Bitcoin will have to become the reserve currency for better or worse. It's not going to be the Chinese RMB because I think they have their own debt problems, and it's not a coincidence that as we're seeing all-time highs in US debt, we're seeing all-time highs in Bitcoin.
We had a great chart in there too in your presentation. But what's the tipping point for that to happen? When debt hits a certain level, suddenly we have to worry about the world reserves currency being the US dollar?
Yeah, I mean, there's not usually, it's like one of these things like the frog is slowly cooked, and I think if you look at other countries in the past, it was maybe around 150% or 200% debt to GDP. Things started to get a little wonky, and so we're going to have to see what happens. I hope that the Congress, which is doing an amazing job, by the way, and on passing legislation in a bipartisan way for crypto, and this administration, the Trump administration, has been an incredible tailwind for crypto. They've done an incredible job. So, I think there's a lot to be grateful for, but I hope that the U.S. government can get the spending under control to preserve this American experiment.
Do you agree with Elon that this tax bill that might pass, that could be the triggering point? That's the triggering point for potential economic crisis.
I'm not. So I'm reading both sides on this, and I don't know enough to say for sure. To be honest with you, you're asking questions a little above my pay grade, but I think this bill, it doesn't have the full ability to touch on discretionary spending. There may need to be a follow-on bill to that. I hope that they're working on that and make the best they can out of this bill. Maybe there needs to be separate legislation to cut spending elsewhere. I don't know.
What would a Bitcoin reserve currency mean to a company like Coinbase?
Well, it would certainly mean increased adoption of Bitcoin, right? I think that our goal is to power more and more of people's financial lives with Coinbase products. And we started it in trading. Now we're moving into all kinds of financial services like payments and borrowing and lending. And eventually, I think crypto and Coinbase can be a replacement for people's bank account, right? I think that more and more of their financial life will happen on-chain with Coinbase, and it'll bring new benefits and services to customers. Like, why shouldn't you earn 4.5% on your checking account, right? Or why can't you send money instantly anywhere in the world for free? Or, why can't you do, if you live in Turkey or Nigeria, why can't you trade U.S. equities 24/7 with perpetual futures, right? So
seems logical, right?
Yeah, I mean, sometimes there's artificial barriers and middlemen taking fees, and that's what crypto is all about. It's about updating the financial system, bringing freedom and an individual sovereignty to people all over the world.
I was reading some research on crypto from the JP Morgan team, and they said the retail investor is looking for the next catalyst in Bitcoin. I mean, it made sense. It's been a pretty big year. We've had the Bitcoin Reserve. We have companies like yours putting out new products. But is the next catalyst for retail investors that rising debt that you're talking about? As this continues to go up, why wouldn't you want to own Bitcoin?
Yeah, I do think the average person in America, even if they don't quite understand, interest rates and the yield curve, they understand that their money is worth less than it was 5 years ago, and they feel that something is inherently untrustworthy or broken about that. And so I do think they are looking for alternatives, and Bitcoin is probably the best answer, and that's why we're seeing all-time highs in Bitcoin prices.
Take us through some of the products you dropped today, because there was a series of them, and I came away thinking the next reinvention of Coinbase is underway.
Yeah. Well, for a long time, we've been serving large financial institutions, BlackRock, Stripe, PayPal, and large companies. But today we announced a product for startups and medium-sized businesses called Coinbase Business. It lets them manage a lot of their financial life, and we introduced a powerful set of payment APIs that allow them to pay vendors, contractors, even receive payments from their customers as revenue, and do all the accounting and tax treatment and everything in their Coinbase Business account. So for a lot of startups, managing money and payments is a huge pain, it's expensive. Eventually, capital formation, all kinds of things will come on chain. But we're starting with that Coinbase business account today, and that suite of payment APIs. Coinbase is coming into payments in a big way. We also, on the consumer spending side, we announced a partnership with Shopify to power USDC payments for Shopify merchants, and we announced an Amex Bitcoin card, right? So it just shows that crypto is updating all aspects of the financial system, and Coinbase is shipping product at a startup pace.
Do you want to take the fight to credit card issuers? Is that the next frontier?
Not that directly. I think that they play an important role in terms of the products that they provide around the world, and in fact, we just launched a credit card with Amex. We have a debit card with Visa, so we're partners with them. But I do think over time, crypto is going to cause the people to question the margins, right? And there's a whole ecosystem that's built there with lots of middlemen and lots of fees. If that can be done cheaper for the average customer and the average merchant, I think that the credit cards are looking closely about what is their stablecoin strategy. And I think the smart ones, the big ones, will be participants in that, not left behind.
Brian, you started this day around a little after 10 o'clock on stage with Jeremy Allaire, of course, the CEO of Circle. That company's off a really big debut. Are you still an investor in Circle?
We are an equity holder in Circle, yep. And we're the largest distribution partner for USDC, and so we have an economic agreement with them that is perpetually renewable, yeah.
How intertwined are you with Circle?
Well, right now they're the issuer of USDC. We're a distribution partner, but our economic arrangement with them is substantial. I think that the market may not be fully valuing that in Coinbase's stock at the moment. But yeah, I think the big picture, it'll all work out, and we're excited about our partnership with them for the long term. Both Circle and Coinbase, we're going to be trying to get more USDC adoption, and right now, every bank and fintech company and Fortune 500 is like a new announcement every day. Someone's thinking like, how do we add these to make our business more efficient?
Would you ever want to put an offer in to buy Circle? I mean, you're already so intertwined.
We would always consider it, but obviously, it takes two people to have something like that happen, and they're crushing it in the public markets, right? So it was something we'd always consider if they were interested, but I think for now it's going really well.
Since I last saw you, Brian, it was Davos. We were sweating, or we were freezing our butts off out in the mountains. But you were added to the S&P 500. Big moment, I imagine, for you and your company and your employees. How has that changed your investor base?
Well, I think it's made our stock less volatile. For better or worse, when we went public, we had a large retail interest. We had some hedge funds. We had also some really great long-term holders of our stock, like Fidelity and others. But I think that with the S&P 500 index inclusion, it's kind of, I don't know if it'll create like a floor on the price, literally, but I think it'll have less volatility because something like 50% of all investment dollars are passively invested at this point. And they're the largest index, so we were very happy to see that happen. It's also just a great moment for crypto in terms of increased legitimacy. I
was talking earlier with Caroline Pham, acting CFTC chair, outgoing, but still she has that position. She made a good point that bullish investors in crypto need to remember there will be regulation, and there are no free rides. What would you tell to bullish investors on that front?
Well, I think regulation will be a huge boon for crypto. So we are actively working all over DC, our policy team, and with this administration to try to get legislation passed. I mean, we think that that's how we expand the TAM of crypto, and frankly, that's why a lot of people are now coming into crypto, because they're seeing that regulatory clarity is on the horizon. So my biggest thing at this point is we need to stick the landing and actually get the Stablecoin Act, the Genius Act, we need to get that passed into law, and also the Clarity Act that's going through the House on market structure, we need to get that into law as well. And so the president has said that he wants both those bills into law by the August recess, and we really appreciate his leadership on that.
All right, we appreciate you having us here at the conference. Brian Armstrong, always nice to see you. We'll talk to you soon.
Thank you.
All right, Josh, back to you in studio.
All right, thank you, Brian. Quick check on the markets here after a day where we did get a soft inflation print. Solid auction didn't hurt either. Hit green across the indices. The Dow finished up 100 points. Your broad gauge, the S&P 500 tax on about 0.4%, and the tech-heavy Nasdaq about 0.2%. That is a wrap on today's Ask for a Trend. Be sure to come back tomorrow at 4:30 p.m. Eastern for all of the latest market-moving stories affecting your wallet. Have a great night.